Toronto. Thanks for taking the time to join us today. I'm Lex, a Capability Advisor here at Charity Services, and I'm joined by Dawn, our Capability Accountant. We are co-presenting this webinar today. The webinar is directed at charities that report under the Tier 4 not-for-profit standard. A little bit of housekeeping before we start. Can you hear us? Make sure your computer is unmuted and check your internet if you're having trouble. The webinar will be recorded and we will send you an email with the recording link and any resources we discuss. We welcome your questions throughout the webinar and we'll have time at the end to answer them, so please use the Q&A box to ask questions. We recommend you ask them throughout the webinar as they come to mind, but please refrain from asking questions specific to your charity. In the unlikely event that our sound cuts out, we'll work through any technical difficulties and aim to be back in touch with you as soon as possible. We also want to make sure you're all in the right webinar. This webinar is designed for Tier 4 charities who have filed a performance report before and would like to understand the changes in the Tier 4 not-for-profit standard. How do you know if you're a Tier 4 charity? Tier 4 charities are those charities whose operating payments are less than $140,000 per year, use cash accounting, and do not have public accountability. Operating payments include money spent on day-to-day costs. They do not include the purchase of assets, such as computers or investments like stock. Cash-based accounting is when cash is recorded as it comes into your charity. Cash is recorded as it leaves the bank, or physical cash is used to pay for something. Cash-based accounting excludes depreciation. While all charities are generally considered to be publicly accountable, public accountability has a specific meaning in the accounting standards. The full definition of public accountability for financial reporting purposes can be found on the External Reporting Board (XRB) website. Generally, it includes entities whose main activity is holding cash or other assets on behalf of others, like a superannuation scheme, or who issue debt or equity. If your charity does fall into this definition, you'll be required to report under Tier 1. So what can you expect from the webinar today? Well, we're going to provide an overview of the changes and let you know when you need to start using the Tier 4 not-for-profit standard. As a reminder, one of the obligations of being a registered charity is to report to Charity Services every year. Charities need to do this within 6 months of the end of their financial year. There are two separate parts of annual reporting: a performance report and an annual return. Most people complete their annual return online as it's quicker and easier. In the annual return form, you'll be asked to update your charity's details, if any updates are necessary, and answer some questions about your charity. Some of the information may be the same as what's in the performance report, so make sure you refer to your completed performance report for the answers. Your performance report will be displayed on the Public Charities Register, and the data that you provide through the online annual return form is collated with the other 29,000 charities on the register and can then be used to tell a story about the wider charitable sector in Aotearoa. The External Reporting Board, XRB, has recently updated the financial reporting standard for Tier 4 charities. The standard is in effect for financial years that began on or after 1st of April 2024 and applies now for most charities. Any charities with a balance date at the end of this month, March 2025, will be the first group required to use the updated standard to create their performance report. All charities who have started their financial years since the 1st of April 2024 should have a look at the updated standard to understand what has changed. This may affect how you keep track of your service performance and cash received and paid throughout the year so that you're ready when your year ends. Charities currently preparing their performance reports can also use the updated standard. For example, if your financial year ended in December 2024 and your performance report and annual return are due by the end of June 2025, then you can choose to use the updated standard. The updated performance report is easier to complete, less information is required, and the categories of cash received and cash paid are more clearly defined. The table above shows recent and future balance dates, when their respective annual returns and performance reports are due, if the Tier 4 NFP standard is required to be used, and when it can be opted into. If you have a balance date before 30 September 2024 and haven't yet filed your performance report and annual return, you're also able to use the updated Tier 4 NFP standard as long as your financial year began after the 1st of July 2023. That means a year-end date of 30 June 2024. There are two templates created by XRB to help you streamline your reporting, and both are available in two formats. The full template provides you with the ability to detail further information using the notes section. The simple template is great if you don't have a lot of activity or don't need to use all of the notes included in the full template. However, it is possible to use the full template because you want to provide additional information for one or a couple of categories. You aren't required to use all of the notes. Have a look and choose the most suitable template for your charity. Both templates can be found on the Charity Services and XRB websites. Don't worry about looking for them right now, though. When we email you a link to this recording, we will include links to the templates as well. The template is optional, however, and we will accept performance reports in other formats as long as they comply with the requirements of the Tier 4 standard. To find the updated templates on the Charity Services website, select Reporting Standards at the top of the page, then Tier 4. Scroll down the page past the date table. Just below it, you'll find the simple and full templates in Excel and PDF formats. On the XRB website, you can find the Tier 4 NFP standard and corresponding templates by selecting Standards, then Accounting Standards. On the Accounting Standards page, select Tier 4 under the Not-for-Profit heading. Once on the Tier 4 Not-for-Profit page, choose the Tier 4 NFP standard issued May 2023 link. This will lead you to a page with additional information, the Tier 4 standard, and the full reporting templates. So what has actually changed? The Tier 4 standard has been updated and is now called the Tier 4 NFP standard. It's been simplified and is now much shorter and easier for charities to use. The Statement of Service Performance is shorter, with key activities being better defined, and the Statement of Resources and Commitments has been combined with the Notes section. The standard itself has been reduced from 30 pages to 20. Now we're going to take a closer look at the performance report template and talk through the changes. Don't worry if the images are a little hard to read on the slides. You'll be able to read everything on the template itself. You'll see on the template that the entity information section has been simplified and now only requires you to record your charity's legal name and any other name you're known by, and type of entity. For example, you may be a charitable trust or an incorporated society. If you're unsure what type of entity your charity is, you can check the Companies Office website. The Statement of Service Performance has also been simplified. Previous standard asked you to record your outputs and outcomes. To make it simpler to understand, the required information is now called Key Activities. Charities are required to describe their main activities and provide quantities to the extent you're able to. You don't need to list everything your charity did, just the most important activities. Think about the story you want to tell to end users, including funders, so they can have an overall understanding of what's been done during the year to achieve the charity's purpose or goals. If you've reported before using the previous Tier 4 template, but this is your first year using the updated standard, you can either provide comparable figures for the prior year or attach your prior year performance report. You'll note required fields are now colored green instead of being marked with red asterisks. There is also a box to the right side of each line to indicate if it's required. I'm now going to hand over to Dawn, who's going to take you through the last half of the webinar and discuss the financial parts of the performance report.
Thanks, Lex. The Statement of Receipts and Payments is now called the Statement of Cash Received and Cash Paid. This statement is the same for both the simple template and the full template. The statement begins with the balance in bank accounts and cash on hand at the start of the year. Include here the balances of all bank accounts, including term deposits that have not matured, and cash on hand. The first section is cash received from operating activities. You'll notice grants have been separated from donations into two new categories: general grants and service delivery grants and contracts. To understand the difference, an example of a general grant would be an agreement to receive $10,000 from a government agency to operate a community health clinic for a period of time, whereas an agreement for a charity to receive funding based on the number of patients seen at a community health clinic is likely to be a service delivery grant or contract. When determining which category to use, review the contract, if applicable, related to the funding your charity has received or will receive, and choose the category that best suits. The other categories of cash received are largely the same. However, I do want to note the previous category of receipts from selling goods or providing services. Why does it do this? Sorry. I do want to note the previous category of receipts from selling goods or providing services has been updated to sale of goods or services, commercial activities. The definition of this category as written in the standard is cash received from the sale of goods and services, or where goods or services are sold on commercial terms for the primary purpose of making a profit. The profits earned are then used to help fund the delivery of the entity's primary objectives. This means when your charity sells goods or provides services with the intention of earning a profit, and those sales do not directly correspond with your charity's purpose. For example, if you run a health clinic primarily funded by a grant, and you charge very small fees to patients, those fees are directly related to your purpose and would be included in the same category where you placed the grant funding, either general or service delivery. However, if your charity regularly sells household items to support a food bank, those funds would be included in commercial activities. Looking now at the cash paid for operating activities section, there are minor changes here. The categories for employee and volunteer costs have been split, and for charities registered for GST, there is a separate line for you to include GST paid or refunded during the year. Statement of cash received and cash paid for both the simple and full Tier 4 templates includes a section for cash received and paid for other activities. This section had previously been included only in the full Tier 4 template as capital receipts and capital payments. The updated categories in the other activities section is much more clear. Sale or purchase of investments, sale or purchase of other assets, cash received from loans and borrowings, and repayment of loans and borrowings. The Excel version of the statement will automatically calculate the closing balance of cash based on the entries above. These cells are colored gray. Below that, there are 3 lines for charities to include the closing balances of bank accounts, term deposits, and cash on hand. This was not previously included in the simple Tier 4 template. Altogether, these amounts should equal the calculated closing balance. If it doesn't, you'll receive an error message. The message will advise if the current year or previous year column does not balance, and the square to the right of the totals will be red. Previously, only a message saying false would appear. Once everything balances, the box will turn green and display OK. If you are unsure how to categorize your various receipts and payments, we advise using your best judgment. More importantly, keep track of how you categorize your receipts and payments so that you can be consistent in the years to come. If you want to provide more information, you can do that in the notes section of your performance report if you are using the full Tier 4 template. The simple Tier 4 template does not include a section for additional notes. We are now on to the last section of the performance report, the notes. The Statement of Resources and Commitments is no longer a part of the performance report, and sections of that statement have now been incorporated into the notes. The notes section has also been streamlined and simplified. There are 2 required notes and 3 that are required if they apply to your charity. The 2 required notes have largely been completed already in the template, and the other notes are marked with green boxes. The required notes are accounting policies and the GST disclosure. The required, if applicable, notes are significant assets, significant liabilities, related party transactions, or transactions with close relationships, and correction of errors. The full Tier 4 template also includes other notes, which are optional. For the purposes of this webinar, we'll be looking at the simple template for the next few slides. The first required note is accounting policies. In the full Tier 4 template, this note is numbered as Note 1. For both templates, the accounting policy section has been simplified. The basis of preparation is already pre-populated, similar to the previous template. You don't need to add anything here. The GST note simply states that all amounts are recorded on a GST inclusive basis. This assumes that most charities using this template will prepare the performance report with amounts from their bank statements, which include GST. However, charities will still need to add if they are registered for GST or not. The template does not currently include this statement. The disclosure of significant assets is required, if applicable, to your charity. In the full Tier 4 template, this is note number 6. This note partially replaces the Statement of Resources and Commitments that was required under the previous standard. This is where you include information about any significant assets your organization holds, such as land, buildings, vehicles, or investments. These assets may have been purchased or donated. The note is not expected to list all of your assets owned by the charity, just those that would be considered significant to the readers of the performance report. You only need to enter an amount for the total value of these assets if the information is easily available. If a line item is not relevant for your charity, you can delete it or enter 0 in the value columns. Depending on the asset, you can find the value on a recent rates assessment or an invoice. If your charity has used an estimated value for any of the assets, perhaps for something donated, the standard requires you explain that in the box provided, as well as the source of the estimate. For example, if you estimated the value of a donated vehicle by looking at TradeMe for similar vehicles, explain that here. The next note is significant liabilities. In the full template, this is note number 7. This note was also a part of the Statement of Resources and Commitments under the previous standard. This note is required if applicable to your charity. It provides information about any significant liabilities or amounts owed to external parties. Significant liabilities could include things like major debts or amounts owed to others. The total amount expected to be paid in the future must be entered. The note does not need to list every debt, just the ones that are important for readers of the performance report, such as a loan from a bank or other external organization or person. If your charity does not have significant liabilities, you can enter 0 into the values column. The third required, if applicable, note is related party transactions. This is note 8 in the full template. In the simple template, this is called Transactions with Close Relationships, as you can see on the slide. The structure of this note is unchanged from the previous standard and template. However, what is required to be disclosed has changed. Previously, charities were required to disclose significant transactions with a related party, or any related party transaction that was on terms that would be different between unrelated parties. For example, free goods or services, even if insignificant. The Tier 4 not-for-profit standard now only requires significant related party transactions to be listed, and significant amounts owed to or owing from related parties at the end of the year. Examples of related party transactions include a charity selling a significant asset to the spouse of a board member, or a charity loaning cash at below market rates to an officer. If there were no related party close relationship transactions, you can delete the table. Otherwise, delete the note stating there were no related party or close relationship transactions during the year. The last required, if applicable, note is for reporting correction of errors. This is note 9 in the full template. This note is unchanged from the previous full Tier 4 template. It had not been included in the previous simple template. The purpose of this note is to provide readers with information about any errors relating to previous years that have been corrected in the current year's performance report. For example, if the closing bank balance in the previous year's report was incorrect and had been updated in the current report, all prior year corrections that were corrected in this year's report should be noted here, not just significant ones. Please note this does not apply to rounding errors, which are generally $10 or less. If your charity has corrected an error in the current performance report, this note must include the following for each error relating to the previous financial year: the cause of the error and how the error has been corrected in the current financial year. If you are using the full Tier 4 template, the following notes are available to use and are optional. They are very similar to the previous template, only cash received and paid for other activities have been split into separate notes. These notes can be used by your charity to further break down the receipts in each of the categories on the statement of cash received and cash paid. Note 2 is analysis of cash received from operating activities. Note 3 is analysis of cash paid for operating activities. Note 4 is analysis of cash received from other activities. And Note 5 is analysis of cash paid for other activities. You may recall the previous Tier 4 templates included notes for events after the balance date and a general additional notes. These notes are not included in the updated simple or full Tier 4 templates at the time of this webinar. However, charities can include additional notes in the Excel template by copying and pasting the correction of errors note number 9. Additional notes can be used to provide any other information charities may want readers to know in order to understand the overall performance of the entity, such as grants received with conditions, resources used as security for borrowing, or events after the balance date. Please refer to the XRB Tier 4 standard for more guidance on what details charities should include if providing these additional notes. That was a quick overview of the changes to the performance report under the Tier 4 not-for-profit standard. To recap, the standard is simplified, shorter, and easier to complete. The entity information section has been simplified. The statement of service performance has changed from outputs and outcomes to key activities and quantities. The categories of cash received and cash paid have been expanded and are better defined. And the statement of resources and commitments has been combined with the accounting policies and notes section. Your next steps are to start thinking about how you collect the information you need to prepare your performance report. Also consider the updated categories and how you'll regroup your cash receipts and cash payments. You may already collect the financial information required through your bank statement, but it would also be helpful to set up a simple system to categorize these receipts and payments throughout the year. You could write the category next to the transaction on the bank statement when you receive it, or the more tech-savvy of you could set up a simple Excel spreadsheet to categorize them. It is good practice to track any grants you may receive and how the money was spent, especially for grants that have conditions attached. Consider your significant assets and significant amounts owed by your charity, as well as money held on behalf of others. Collection of data throughout the year is crucial to being able to complete your performance report.
Thanks, Dawn. We now have some time for your questions. Please type your questions into the Q&A box if you haven't done so already. We'll do our best to get through as many questions as we can. We do ask that you refrain from asking questions specific to your charity, though. If you have a specific question about your own charity, please send us an email or give us a call. Our contact information is on the slide. So, Dawn, the first question, can you define service? I think this might be in relation to grants for service delivery.
Oh. I have provided an example. So I'm sorry, that question is a little too broad. I'm not really sure what it means. But there is an example in that slide which everyone will receive.
What about the statement of service performance? How would we define service in there?
Oh, yeah. That's really what your charity does. So the section for financial information, that's clear. That is the money you spent and the money that came in. But the service is what your charity actually did, especially if you've listed what your purpose is. This is how you achieved your purpose or are working to achieve your purpose.
Fair enough. And the next question, is quantities the number of people, events, or a monetary value? I think this is also about the statement of service performance.
Yeah, look, it could be all of the above or any of the above. The standard is pretty open in how you want to define how you've achieved your goals. You don't particularly need to use that format. You can put graphs in, you can put bar charts in, whatever works for you to define how your charity provided services and actions throughout the year.
And of course, remember, no matter how you choose to measure it, number of people, number of events, making sure you're consistent year to year so that you can get those comparable figures.
That's right. That's the most important.
Next question. Our previous year's reports have been prepared using accrual accounting. However, we wish to use Tier 4 cash-based reporting. My understanding from reading the appendix to the standard is that we don't need to provide comparative figures the first time we apply the standard. We just attach a copy of our previous performance report so that you're not restating all of last year's figures to a cash basis. Would that be correct?
That is correct. You have that choice if you move down to cash accounting. As long as you meet the other requirements under the standard, you can include a copy of your previous year's performance report.
Would you say there's a benefit to doing it one way or the other?
Not really. If you're moving from another standard, it's more complicated to try to restate everything. If you have used the previous Tier 4 standard and you're moving to this standard, it might be better to restate because you're just going to have to keep doing that going forward, and it will be easier for the reader. But that choice is available.
Fair enough. The next question. Has the Xero advisor reports been updated?
I'm not sure. I am not familiar with Xero. I don't have access to that. So I don't know. You'll have to contact Xero. Apologies.
Does other assets, can that include contents?
I'm not really quite sure what you mean by contents.
Like inventory, maybe?
Potentially. Yeah, I'm sorry. I need more information. It's a little bit too broad of a question.
Is there a dollar threshold for significant assets or liabilities?
There isn't, and I know that's frustrating. Significant is really dependent on the size of your charity and what your activities are, what you have on hand, what your revenue is, and who the readers of your charity are. So unfortunately, there's no very specific test to say this is what is significant. It's very value-based, which I know can be frustrating. But for example, if your charity only spends maybe $500 a year and you buy something that's $100, that might be significant to you. Whereas if your charity spends $100,000 a year and you buy a $100 asset, that's not significant. I hope that helps.
So depending on the size, an organization might have a computer that's significant, or a vehicle that's significant, or a piece of property, real estate that's significant.
That's right.
It really just depends on the individual situation.
That's true.
Next question. Do you have to include significant assets if they aren't actually on your books due to following cash accounting? Separate fixed asset schedule just for information purposes only.
Well, even with cash accounting, significant assets should be on your books. It's depreciation that won't be on your books, but assets would have been purchased, probably with cash, or they would have been given to you. They would have been donated, and that also should be recorded, at least in the significant asset section, where you can show that it's been donated to you, and you can estimate the value if that's available.
And if they weren't purchased outright or donated, then probably they would have been purchased on loan or something.
I'm not sure how else you'd have an asset.
Fair enough. When is the annual performance report due if my balance date is 31st of December 2025? How does this align date-wise with the annual return?
I'll let you take that one, Lex.
Fair enough. Your due date is always 6 months after your balance date. So remember, your balance date is a date within the year, not 2025. So if your balance date is that, your balance date every year is 31 December. And if your balance date is always 31 December, then your due date, being 6 months after that, is always going to be 30th of June the next year. If you've not reported for 2024 and you don't need to report for 2024, if you're a brand new charity, then your first year reporting is going to be 31 December 2025, and it will be with this new standard, the Tier 4 NFP standard. And that's the performance report and the annual return at the same time. Together, they make an annual return.
You can report before that, though, can't you, Lex?
Absolutely. Anytime from your balance date happening, you can submit an annual return to us with your performance report. Next question. Presumably next year, the last year column will pre-populate with this year's data when filling out next year's form.
I think that depends on the template you're using. If you're using the PDF one, that's filled out by hand. The Excel one, it's possible if you, I don't think it has that capability.
You would need
Actually,
to program it in, I think.
Yeah, I think you'd need to program that in or save it as a new copy and move the amounts over, if that makes sense. Yeah.
Next question. Sports clubs that receive grants from, for example, pub charity for an event, under what category should they be shown?
Yeah, have a look at the standard and when we send the slides out, the information on there. It's dependent on the expectations over their use. If it's generally for your operations, then it's likely going to be a general grant or donation.
Will the new template be emailed to us before the end of financial year 30th of June?
Yes, I think it will. That's the plan.
Yeah, when we send out the resources for this webinar to everyone who's registered to attend, it will include links to download the templates. Remember, you can download the template at any time. They're currently available on our website and on XRB's website. Next question. Under notes, is there an option to declare GST exclusive, as this is how accounting software reports, not per bank statements as it's declared currently?
Yeah, I understand. In the previous template, they did provide both options, and then you just chose one and deleted the other. They didn't do that this time. They just assumed that everyone would be reporting inclusive. So all you would need to do there is to change inclusive to exclusive in that statement. So yeah, you would need to update that statement for your specific situation.
Next question. I'm concerned that commercial activities used to fund the charity, for example, an op shop, may become liable for income tax even when it's run to fund the charity.
Yeah, we can't comment on that. That is under the IRD, the Inland Revenue. That's something that they are considering potentially. I think they've put out a recent study or consultation document. I have not read it. Sorry, we can't really comment on that. We have nothing to do with that.
If you have any questions regarding tax, always best to direct them to Inland Revenue directly.
They do have a whole website, web page on their website for charities.
Next question. Why is Note 5 detailing purchases of other assets? Where is the purchase of assets line? If it doesn't exist, why is the word other used?
Oh no, I'm gonna have to go back to that slide.
Fair enough.
I shouldn't be trusted with this. Last week, I went all the way out of it. So note
Note
5. Note 5, detailing purchases of other assets. Oh, I see. Analysis of cash paid for other activities.
So there is an entirely separate section of notes for assets.
Yeah.
Note 5 is just expanding one of the headings.
From the statement of cash received and cash paid. So that will be here. Other activities. Purchase of investments, purchase of other assets, repayment of loans and borrowings. So assets is a pretty broad category. It can mean physical assets or financial assets, as you can see with investments. So for actual assets, for big physical assets, that will be on the significant assets note, which is note number 6, or just significant assets in the simple template. Smaller ones are included in that general statement of cash received and cash paid, and then you can break it down in that note if you choose to. If you use the simple template, there is no ability to do so. It's just a number.
Fair enough. Is depreciation of assets such as musical instruments no longer applicable in filing an annual return?
For the cash basis of accounting, depreciation is not considered because it's not a cash transaction.
And that would be the same as the previous standard.
That's right. That's always been true for cash accounting. If you want to use depreciation and depreciate your assets, you should move up to the Tier 3 standard, where depreciation is allowed because you use accrual accounting.
Fair enough.
Mm.
Do computers and AV equipment count as significant assets to be reported?
They might do. It depends on the size of your charity and how significant they are to that charity. Apologies again. It's a judgment on how big your charity is and how significant those assets are to your charity.
In that context, would significant ever mean important to rather than size?
Significant in this template and in this standard is, would it be important to the person reading your financial statements? So if you are a charity that, say, is maybe a sports charity, and you also happen to have instruments for whatever reason, but they aren't really used within your charity, you just happen to own them, that may not be as important to the reader of your charity who wants to know, well, what are you using? What sports equipment do you have within your charity? But if your charity is one that relates to music and you do have a bunch of instruments on hand, you might want to collect them all together and then list them as these are the instruments I have available for, say, the children who come to this charity and learn music.
Fair enough. Does it have to be on a cash basis? Can it not be accruals as well?
Yes, tier 4 is cash basis. Accrual is tier 3.
So if they want to use accrual, it has to be tier 3
That's right.
at a minimum.
You cannot use tier 4 if you're doing accrual accounting.
Next question. We're an incorporated society that will be registering soon, re-registering soon. Do we need to upload something when doing our charity return?
Lex, you want to take that one?
Sure thing. When you're completing an annual return, it's made up of both the performance report and an annual return form. Both are required for your annual return to be completed. So if you're successful in re-registering, when your next financial year ends, you will need to complete an annual return. That will involve preparing a performance report, and it will involve completing an annual return form, attaching that performance report to it, and submitting that to us as a complete thing. Next question. We prepared our Tier 4 performance report earlier in the year on the old template. Now the new standard has come in. Do we need to redo our performance report in the new template?
It depends when your year started. If your year has already ended, no, you do not have to use it. You can have a look and see if it's easier and see if you want to move to it. But if you've already completed your report and potentially filed it, I wouldn't worry about it.
Makes sense.
Right. It's not required yet. The people whose charities have a financial year end at the end of this month are the first ones to be required to use the form. Everyone before that, it's optional.
Next question. Other assets include significant contents of the building, for example, a piano. I think this has kind of been discussed as part of assets and how they're significant.
Yeah, I would suggest that's an actual asset that would go into your significant assets disclosure.
Next question. In terms of assets, are term deposits deemed to be investments?
It depends on the length of them, but likely they're just going to be considered cash. Have a look at the standard. It's generally based on how long your term deposit is. If it will come due in less than a year from now, it goes in with your cash. And I think there's a line specifically for term deposits on the cash received and cash paid statement. I'm not going back because I will not I will not do well with these slides. I know I'm going to just go all the way out again.
That's okay. And the next question. We hold a stock of uniforms. Where is the value of this reported?
Have a look at the standard and choose the best category for you. That's quite a specific question.
Fair enough. Many small charities go to the expense of an audit or a review, but it may not always be necessary. Does this still stand?
It does still stand. Audits and reviews are required for charities who have expenditure over 550,000 for the previous 2 years or 1.1 million for the previous 2 years. So you're going to be a tier 3 charity if an audit or a review is required under the Act. If you, as a charity, has decided to get a review or an audit due to your charity's rules, then it may be an expense that isn't necessary for you. But again, you should check your rules and understand why they're in your rules. If it's because a funder has requested that you have a review or an audit and you will not receive that funding without one, then it will be necessary for you. But it's a choice at that point. It's not required under the Act.
Fair enough. And always important to remember, if it's a choice that's no longer appropriate to your charity, you do have the option of changing your rules as well. You'll need to follow your rules to do so, but the option is always there.
That's right.
The next question. I think the assets were donated or possibly expensed. It was before my time, but they aren't recorded as assets on the books. I think that's something we've covered pretty extensively. Have a look at your charity and what you consider as significant, how they were received. Uh, if you provide a valuation for an asset, just state how you came to that figure.
If you have access to an accountant, ask them your question. If you have additional questions, email us or call us.
The next question. Our fiscal year date is December 31, 2024. And the year-end report has been submitted. Do we need any updated information with charity services?
Lex?
Honestly, the easiest way to check that is by logging into your dashboard. If the annual return for year-end 31 December 2024 says complete, currently you don't need to provide any further information. In that instance, if something more is required, we'll be in touch with you. But if you've already filed and you've provided a performance report to us, and if you were over the threshold, a filing fee has been paid, then most likely it's complete. If, for example, only the annual return form has been submitted and we're still waiting for a performance report, then the status of your annual return will say financial statements required or something similar to that. So have a look at your dashboard, have a look at the status. You will usually be able to tell what's required from there. Next question, how to treat a paid part-time admin or coordinator?
If this person is an employee, which sounds like they are, then I would suggest that their expenses be included under employee expenditure. Costs for employees. I don't remember the exact title.
Fair enough. The next question, do I have to use an accountant to prepare this report?
You don't have to. Hopefully it is accessible enough to you, simple enough that you are confident in filling it out yourself. It's always helpful to talk to an accountant if you'd like to, if you have questions about particular items that you want to categorize in a specific way. There are resources out there. I think there are charities that provide accounting services to other charities. So that might be something you could look into, but hopefully you'll just be able to complete it without an accountant.
The next question, is there a minimum amount of activity that's required to keep the charity registered?
Lex?
That's a pretty tough question. I don't think I have an answer for you at the moment. I would suggest sending us an email with the details of your specific charity. But keep in mind, one of the requirements of remaining registered is that you operate exclusively for a charitable purpose. So you should be pursuing that charitable purpose in your activities every single year. I don't think I can quantify a minimum amount of that because it is going to be different for every single organization. But if you want us to look into that further, send us an email, info@charities.govt.nz. We'll do our best to help you out with it. The next question, we're going to deregister. Does that affect our charity status with charity services and to claim tax rebates?
Oh, Lex, that's one for you too.
I think this question needs a bit more clarification. If you're going to deregister with charity services, then that is by definition your status with charity services. So when an organization deregisters with us, their status changes from registered to deregistered, and that would usually affect your tax. But again, questions about tax need to go to Inland Revenue. If you're referring to incorporation with New Zealand Companies Office, that depends on how the incorporation, how you intend to go about unincorporating and whether or not the entity will continue to exist. But charity services does allow you to be registered without being incorporated. So it really depends on exactly what you mean by deregister in this instance.
If you have further questions, you can always email.
Next question. So any hints for keeping a copy of 1 year's entries, as you'll need to manually re-enter that in the succeeding year, i.e., is there a report produced for each charity at the end of the submissions process?
Well, if you use the Excel template, you'll have that information. You can just save that to your files. If you use the PDF and print it out, you can save that as well as the physical copy. You have ideas, Let?
Absolutely. When you file an annual return, that annual return and the performance report you provide with it is on your register. So you should absolutely be keeping your own copy of the performance report for your records. But if anyone ever needs to find it, you can always find it on your dashboard and on the public register. So if you're new to Roll and you're preparing your first performance report and you need those comparable figures on your dashboard, download previous year's performance report, grab those figures from there.
So what you're saying is they can log in to their to the Charity Services website with their charity's login to get their information, and all of it's there. And if they don't remember their login, one, they can ask us for help in that.
Absolutely.
Or they can go to the public register, look themselves up, and find the information there.
Absolutely. Performance reports and annual returns, provided they're actually filed with us, are very available, and anyone can view them for the most part. The next question, I just want to clarify specifically what the Tier 4 is this for charities earning over. I think that's about the threshold, reporting threshold.
Right. The threshold is $140,000 of expenditure or less.
So if your organization spends less than $140,000 in a year and also chooses to report using cash, then it is Tier 4.
That's right. And they don't have public accountability.
Absolutely. Next question. Do we get any feedback if the form isn't adequately or incorrectly completed?
Yes and no. So for the Excel template, there are some checks and balances throughout the template for balances that are meant to balance. So the subtotals and the totals will automatically calculate. And if you enter in figures in one part, and you say, for example, the statement of cash received and cash paid, I'm doing this from memory. You'll enter in your opening cash. You'll put in there things that money that you received, money that you paid. And at the bottom of that page, you list your bank accounts with the balance of your bank accounts at the end of your financial year. And if those amounts in the bank accounts don't match with the calculation of the Excel spreadsheet of opening cash plus cash received minus cash paid, you'll get a little notice to the side of the sheet that will say current year does not balance, or prior year or last year does not balance. But if they are equal, it will just give you a big green box that says, okay.
One of the main difficulties I see people having with the performance report templates is getting that closing balance for this year to be correct. And most of the time, all you need to do is add in an opening balance for the previous year. If you're brand new, started this year, make that opening balance for last year 0. It'll make your opening balance for this year automatically be 0 as well, and that'll usually make it balance. Similarly, if you've forgotten to add the money that you started with this year, then that closing figure is going to be off by that amount. Next question. Who needs to approve and sign the report? Financial reviewer or officers?
So it needs to be approved by someone who has authority over your charity. That's usually a trustee or an officer.
Would it ever be someone appointed by the charity for that role, like a lawyer or an accountant?
Oh, I guess it's possible. Have a look at the standard and the rules. There's guidance within the template as well on who should sign who should sign your template and your performance report, but ensure that their name is clear, the signature is there, and the date it was signed.
Next question. Note 5, the answer was use note 6, but that's a cumulative amount of assets, not just those purchased in the current year. I can find no purchase of assets line in operating activities. So where do people report their purchase of assets, not just the valuation of it?
Right, so that will be included in the statement of cash paid and cash received in the most appropriate category. If you have questions about that, send us a message.
And remember, you can always use the notes, is it note 2 to note 5? To expand on those categories to provide details of exactly what was purchased. Okay, we understand there was a lot of information in the webinar today. Remember, you can revisit it again when you're preparing your performance report, as it will be uploaded to our website. We hope that attending today was useful to you, and now you understand more about the changes to the Tier 4 standard. If we didn't get to your question, please reach out to us via email or phone. Thank you for attending today, and all the best with your reporting.